Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, June 27th, 5:17 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend. The so-called chinks in the armor that showed up last Friday and stayed today on our short-term trend gauge have nicely gone away, and we're showing all green arrows across the board, and that's because the Dow Jones Industrial Average and the small cap index regained their 21-day exponential moving averages today. Leaders really had a good day today. Uh, they have been on uptrend since May 18th, which is the same day that we put our short-term uptrend into our short-term time frame into uptrend. Basically, we look at the five major indexes and see where is their price relative to these three time frame specific moving averages: short-term 21, medium-term 50-day simple moving average, long-term 200-day moving average. So what happened today? For now, the end of the 5-day pullback, or actually 5 out of 6 days, were red, and we got a very nice bounce near the 21-day exponential moving average on the S&P 500 and the NASDAQ 100, and broad leadership, uh, good participation by leading stocks. Breadth was there as small cap and mid cap performed today, and all in all, led by tech. All in all, a very good day for the bulls, and it puts a line in the sand below yesterday's lows for determining, is the uptrend continuing, and is it strong, or is it weakening? And we use inflection points, very common when the market is acting a certain way and then changes character. The character of the market has been, we're extended and we're pulling back, which we did for 5 out of 6 days, and that ended today. So tech-led bulls regain their mojo is my title for this video. Here are the numbers. RG8 really did well, up 2.01%, led by, there's 8 ETFs in here, but there's 3 that really focus on leaders. FFTY is one of them, SPHB because it's high beta, and ARK-K because these are active ETFs. And well, HP isn't, but it's dependent on the higher beta names themselves. So we like to see those 3 acting well. Those 3 all better than the 2.01% today. So good news there. S&P 500, we opened up 0.2%, and 2 attempted pullbacks during the day were bought up strongly, based into the close. A nice day, up 1.15%. NASDAQ 100 up 1.72. Dow continues to lag, up 0.63. Mid caps up 1.6. Russell 2000 small caps up 1.5. Global diversified 60/40 up 0.57 as bond prices pulled back today. Not by much, but enough. Yields higher slightly across the board. In-house GROTECTION up 1.26%. Then we'll do the tail of the tape and charts of interest. Let's get right into it, and we'll start off, as we always do, with the S&P 500. And this is a very good looking bar, just what bulls wanted. So basically the breakout day was 6-1, okay? And then we followed that up. Well, the clear breakout day was 6-2. 6-1 got us back to the top of the range, but a clear breakout that has held, we haven't breached the low, was on 6-2. 4-day pullback, 6 strong days up, a big negative reversal topping candle. This is telling us we've gone too far too fast, followed up by, that was day 1 of the 5 out of 6 lower. We had let me go back to the the red stop sign on NASDAQ 100. We had it out for the 21-day moving average, took it off yesterday as we got back to a reasonable area relative to the 21. We're still keeping it out for the NASDAQ 100 versus the 50-day moving average. Although we pulled back to 6% yesterday, we're now 7.5% above the 50-day moving average on the NASDAQ 100, which is historically extended. But then again, we are in a bull market for tech stocks, so not overly surprising. So there's the nice move, 5 out of 6 down days, close enough to the 21. A little open, 0.2% gap up at the open, 0.4 on the Qs. Nice close, just what the bulls wanted today, back above the ADMA2, which had acted as resistance for the prior 2 sessions. Let's go to the NASDAQ 100 now. Very similar setup. You can see that we haven't cleared yesterday's, so that'd be Monday's highs. Let's go back to the S&P very quickly, and you can see how uh, we cleared Monday's highs. Uh, Big time lagging yesterday on the NASDAQ 100 is the explanation for that. But we are back above the Friday close, regained all the losses from yesterday, close enough to the 21 EMA that it's a test and a bounce. You could also look on the 4 EMA on a weekly chart and see that also. And back above the 8 EMA where we had been playing ping pong for the previous 4 sessions. Now, any pullback, we want to hold the 8 EMA on the NASDAQ 100, very similar to the or on the S&P 500, but uh, that would be the first area of support that we'd be looking for. And then, of course, yesterday's lows, which the 21 EMA will probably be right there when the market opens tomorrow. So 2 levels of support there, Monday's lows and the 21 EMA. Good stuff for the bulls today. Dow Jones Industrial Average weak, but regained the 21, also regained the ADMA, still below that 34,000 level. Relatively weak today, although relative strength has been kind of in line with the market over the last nearly 2 weeks. Mid caps, after a pretty rough pullback on those, regained the 21 yesterday, followed through with strength today, back above the 8 also. Now you can see the handle very clearly. Um, that's a really nice setup too for the pullback. The setup is there for higher prices. I mean, cup and handle was William O'Neill's main chart pattern that he would discuss, and when you're seeing it on the indexes, very clearly the setup is there for the pivot to break out and go higher, or at least test the February highs, which we have not yet done on mid and small caps. Here's IWM. Again, you can see the February highs up here at the 200 level, the cup and handle set up there. We held that 180 level. We regained the 21 and the ADMA today on IWM. Once again, if I haven't made myself clear, I'm pretty happy with today's action. If you're a bull and you're in growth stocks, you're doing your happy dance. Let's go over to some inter-asset correlation. Now we'll start with the dollar. Dollar weak today, second day of its pullback. Not a significant movement. How did that relate to precious metals? We'll do silver first, SLV. If the dollar's down, you expect strength in the precious metals. Well, you got it in silver, although it was rejected by the declining ADMA, but you did not get it in gold stocks, rejected by the declining ADMA and finished down 1.4% on the day, still holding the 200-day moving average, though. And gold, GLD, the metal ETF, also turned away at the declining ADMA and making lower lows for this base. That's really not good. But gold's been in a void for weeks now. Here's the VIX down 3.6%, not at lows, but that declining 21 served as a stop point yesterday on the VIX. We want to see that continuing to come down, see the VIX continue to stay at these low levels. That means volatility is going to be muted. That is a good thing for the bulls. Let's flip to bonds now. Well, let's do Bitcoin first. Bitcoin had been acting very strongly. Took a rest yesterday, up 1.4%. Nice little 5-day digestion that it's putting in after these 3 strong up days, uh, starting last week, actually Friday of the prior week. for Bitcoin. There's a bunch of um, well-regarded institutions that are pushing for a spot Bitcoin ETF, and that seems to have sparked this renaissance in Bitcoin itself. Bonds, broad bond index BND, negative reversal, outside negative reversal. So early, well, let's go to TLT. So down 0.19%, still consolidating. TLT, I talked about this possible breakout above these stacked moving averages, and we got that alert early on, and then it promptly reversed. Wasn't up there very long. Some economic data came out at 10 o'clock, and that sparked a sell-off in treasuries. After that, based kind of the rest of the day, but outside negative reversal is an outside negative reversal. And for now, that's capping the TLT. You can see we continue to have our alerts there. We want to know if we break above this 2-week tight range that we've been in on TLT. Let's go to yields. The 30-year uh, up 0.55%, continues to bounce at that 200-day moving average. And TNX, the 10-year, 1.32%, also bouncing at the 200-day moving average. So that is all the inter-asset correlation that we do on these videos. That means it's time for the tail of the tape. You can pause this to read through the whole thing. Improvement on the stochastics of the indexes. NASI still in a downtrend, but it doesn't turn on a dime, but a day like today will at least slow the decline. This is very much something that we're keeping an eye on. Some news that came out at 8:30 a.m. and sparked the futures a little bit. Durable goods well above expectations. They were expected to decline. They came in well above expectations. That doesn't happen approaching a recession, and that lit a fire under a lot of the cyclical um, sectors today, as well as tech participating. So that was definitely, the market took it well. Let's say that. On the day count, we went from down 5 out of 6 to up 1, day 17 of the breakout, back above the 80 EMA for the first day, 22 days above the 21 EMA. Positive expectations, however, the NASDAQ 100 does remain extended 7.5% above the 50-day moving average. Regain the support resistance level on the NASDAQ 100, still in this 150-point range. In the S&P 500, here's the intraday action, and sector strong today. As I said, pretty diverse. Home builders, transports, banks, Bitcoin, airlines. Before the bell, who was it? It was DAL, Delta, upped guidance, and that lit a fire under the airlines, and this time they didn't give it back. All the big airlines were up nicely today. Retail, XRT, a good day. Semiconductors, a good day. Software even came back and had a good day, but I ran out of room on here. One thing, as I did mention, yields and prices started one way, ended the other. On the downside, the dollar, biotech, gold, and gold stocks, and defensive. Only by the close, only XLV ended negative. XLP and XLU positive, but lagging. So let's change the shade on those. And that's good. Again, it means growth sectors and cyclicals uh, had a good day. In the portfolio, we sold Microsoft. Yesterday we sold Google. We're in chat. I really like that ETF. That's how we're going to play Microsoft and Google, and probably Meta eventually too, instead of owning 3 different names. As long as the chat ETF continues to outperform, we'll stay in that. We added to Tesla, and we closed our hedge with the regain of the 80 MA. You can see the portfolio here. These are the 6 stocks the charts that I'm going to show. These 6 are kind of the 5 software stocks and 1 hardware stock. These are kind of the 6 that act well when AI tech is acting well, and they're kind of a finger on the pulse of growth. And we're going to go through those 6 charts today. It was good to see them all pulling in the same direction. So the bottom line for today, bulls regain their mojo sparked by tech leaders, makes yesterday's lows an inflection point that needs to hold, and that's a level to trade against, and we're very happy to have that. Um, our exposure 1.84. We have about in the high teens of cash that we're ready to put to work in some leaders to take advantage of this next move up. If the next move up continues, again, with stops below yesterday's low as an inflection point. So let's take a look at these 6 stocks that I'm calling the AI 6. Start off with IoT, Samsara. 5 of them are software stocks. So typical pattern, very common pattern on these. They gapped up on either on an earnings report or near when, well, let's start with NVIDIA because this is what kicked it all off. What should AI really have been believed? Is it really the technology that everybody says? Well, all doubt for that ended with NVIDIA's earnings report and the action in stocks as of 525. So we're doing a lot of comparison charts in house to see what's working and what's not. 525 is a very key day for the comparison. Some broke out a little after that. Maybe they had earnings later, but focusing on AI and these 6 stocks, as I mentioned. So here, this didn't take off right away. It was their earnings report on 6/2 that kicked off this big run, and that was quite a run. And then, just as strong as the run up was, the pullback broke the ADMA or the 8 and then the 21, stopped at this 25 area, ran into the declining 21 today, up 2.34%. This was the weakest of the 6, actually, but we're good to see it pulling in that direction. And again, using yesterday's low as an inflection point, this should continue higher if AI stocks are going to continue to lead. This is one of them that we would expect to go higher. I'm going to set an alert at 25. I know it's above yesterday's low as the inflection point, but it's a quarter Livermore number. Let's go to you now, the next stock. 6.5 was the big day on this, although this was another one with a delayed reaction. So uh, I don't know what I think it was an upgrade on 6.5 that got this. Remember, it had a harsh pullback because of why did oh no, never mind. This is I'm confusing this with another stock. This is the Apple day, 6.5. This big move up because of the AI because of the goggles that Apple has coming out. This is what initially lit a fire under that. It rested for a few days. It took off to the high of the base. Harsh pullback, but where did it stop? Where we want it to stop, the 21 EMA. Got another upgrade today. Uh, Regretting that I didn't buy this early in the day. It ended up 15% on 173% average volume. Great reaction by stock number 2 in the 6 stock universe. Let's next go to Palantir. Now, Palantir and SMCI were punted off the 21 over 21 list because they closed last week below it. SMCI, big leader, actually broke out before NVIDIA reported. Massive run from 10 to 17 to 70% run. Pretty harsh pullback, 5-day pullback, broke to 21, regained it today. Volume wasn't there relative to the pullback recently, but up 4.8%. And note that it made the low on Friday, not on Monday. So a little bit of relative strength there. Maybe went too far too fast to the downside. This should hold the 21 on any pullback. So Palantir is stock number 3. Number 4 is Snow. They've got partnerships with NVIDIA and Microsoft. Not as strong action. In fact, it sold off initially on its earnings report, but that earnings report got rid of anybody that didn't want the stock, and the low was made of the gap down and not no lower low. And then it started to come back, pulled back to the 21, made a higher high, pulled back to the 21 again, one close below the 21, regained the 21. It's got the right partners, that's for sure. And again, they're going to have earnings 24, 25. It's still a high price stock, not high priced, high valuation stock if you look at price to sales, but it's another one that we would expect to outperform if AI stocks are going to continue to outperform. And speaking of AI stocks, how about AI itself? This is the one that had the fraud allegations with this big pullback. That guy's disappeared into the woodwork. We had a big gap up on earnings for AI, a pullback, a higher high, another harsh pullback that broke back below the 21. So it has a little bit of work to do. Extremely volatile, up 4.4%. Volume just slightly below average, but after 5 days down, uh, started out with a lower low today. So today's low, clearly the inflection point. But look how volatile this thing is. This is the breakout. And I mean, this is like, it has like a double digit almost ATR. I don't know exactly what it is, but um, some serious this is a serious bucking bronco if you're in it. But again, we expect it to outperform. Good CEO with Tom Siebel, who has Wall Street approval. And finally, the hardware stock SMCI. They provide the servers with the NVIDIA chips for processing AI. They initially gapped up on their earnings report. Nice little sideways consolidation. This is perfect action, what you see here after a big earnings gap. And then 525, this coincided with the NVIDIA uh, earnings report. Another big gap up there, big run higher, pretty harsh pullback right to the 21. Yesterday's low, the inflection point low, back above the 21 today. Um, and this is the sixth of the AI six software stocks, not the big boys, but the not the big boys like Google, Meta, Microsoft, Tesla. But these six are kind of our a finger on the pulse of risk on for AI stocks. So get your watch list ready. Keep an eye on them. We'll be watching them. Let's take a look at a couple from the portfolio today. Meta got an upgrade. Won't even break or spend any time below the 80 MA. One closed below this entire time since its earnings gap up almost 2 months ago. Good day there. Caterpillar still slightly negative on this, but it bounced on the 21, 2 days up now the way we needed it to. Tesla started out weak, finished strong. We added to it around 248-ish where we sold last time when it got too extended, and then continued to watch it go higher, but revisited our sell point, much lower risk as we're much closer to the 21 today and the inflection point. And so added some of that back. We've got 3/4 of our full position in Tesla. Uh, Continued strength over 250 in the 80 MA will get us a little bit more in there. Now, a stock that lagged early today, in fact, turned red while everything was green. People a little bit uptight about NVIDIA, but a very nice close, up 3% on the day. Below average volume relative to the two above average volume selling days over the last 5, but that was a pretty nice run here from 373 up to 430. Deserved to pull back. It's holding the 400 level and the 21. We'll be looking to add a little bit to this one also. And let's see what else today. Celsius. We've got 3/4 of our position in this too. Held the 80 MA. Another one that started slow today but finished strong. So that's what led the portfolio today. And then, of course, our big SSO position. That's going to wrap it. As always, I'd like to hear from you. Don at revereasset.com. The phone is 855 Real Wealth. That's 855 732 5932. Or my partner, Dan Stewart, Dan at revereasset.com. If you're interested joining the dozens of people this year that have come aboard as Revere clients, recognizing the value in participating in uptrends while protecting the downside in unhealthy markets. That's what we spent the majority of 2022 doing. 2023 is time to make some gains. Remember, it's not how much you make in the market, it's how much of that you can keep. As always, we got stops in place for everything that we own. We know the key levels. We know how we're going to react if those key levels are breached, either to the upside or the downside. Reach out if you're interested in this approach. And with that, I'm going to end today's Tuesday's 627 Revere Market Insight video. This is Don Vandenbord, just the facts here at Revere, telling it like it is 5 nights a week, plus a podcast on the weekend. Thanks for listening and have a great day.